Hey everybody, this is John and welcome to the free video. So the two things we want to look at here are bonds and yen. Okay, notice today that bonds rallied up to resistance here and paused. And then if we look at the yen futures, they're also kind of a flight to quality. They rallied up here. You don't see any levels here, so what we have to do is switch this over to dollar yen, which is the inverse but has levels. You can see that this is a pretty significant breakdown. I wouldn't say that there's a ton of support here, although we're just extended, and if we're extended, we then can revert back to the mean. So why is this important? Well, this is important because when the yen is going up and bonds are going up, then you are going to see pressure on stocks. All right, and we saw that today. Now they did make a great recovery. S&P started out of the gate. In fact, let's look at an SPX chart intraday here, and it'll be a little easier to see. So out of the gate, bonds were up, yen was up, and stocks are just under pressure. But what was interesting is that okay, so bonds are up and then they flatlined, and then yen was up and they were flatlined, and when they flatlined, stocks were able to recover and rally into the close. And the S&Ps were down 3 points. S&P futures after hours got a little stronger and became unchanged on the day for the most part. And the reason this is interesting is that tomorrow on Wednesday, if bonds and yen continue higher, you can expect stocks to sell off, okay? If bonds and yen are flat to sideways, you can expect stocks to kind of hold their own. I would say potentially be choppy, but if bonds and yen roll over, look for stocks to rally really hard. So the interesting thing about today is that, this was like a pretty scary move, lots of selling. And then what happens a lot of times is people load the boat short. So how many people are short right here? So this is just a long way of saying like, hey, this is this is a choppy market. I'm not expecting a huge down move. I am expecting we are in a downward channel here on the S&Ps, but once we get through this week, we've got a long 3-day weekend. Markets are closed on Friday, and then next week we have monthly expiration. And typically what happens is the week before expiration, we kind of dip down and then we kind of grind into expiration. So, I don't know if exactly that's what's going to happen again here, but, we're interested in a couple different things. So how do you play this kind of stuff? Well, what I like about this kind of market is being, first of all, it's good to be hedged. So these are some VIX calls we picked up. You can see that this was, got these at $1.25. Now they're, almost at $4. So that's a great, little move for something like this and a way to hedge. And then from there, focusing more on premium selling as opposed to directional. So like for Microsoft here, we're just selling premium and just making a little bit of money every day. So in this kind of a market, we don't want to make any big bets, but we still want to try to find ways to kind of get some steady income out of it and then hedge ourselves against a potential backlash to the downside. All right. So that's what we got. And then for tomorrow, in the room, a couple of stocks that I'm going to be looking at. One to me that's really interesting here is just CMG. So CMG has earnings coming out next week, and with what's happening with Panera getting bought out, I think CMG, anybody who's short CMG is starting to get a little nervous. And I think we could get a potential little rally into earnings. I don't know about earnings, but we just bought some calls for next week just to see if we could get up to 466, this voodoo line prior to earnings. And this is something that I think is going to move independent of the stock market. All right, hope it helps. You guys have a good one. See you at the next update.